Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Coming up, inflation watch. US stocks point to a muted session ahead of key inflation data. And crypto stocks shine as Bitcoin soars, hitting a fresh record. And crude caution, oil falling 1% on Fed rate cut caution, and stocks build. Now, just going to show you the markets in just a second, but we do have some breaking news just coming through right now, and it's the GDP number. This is the second estimate that we are looking out for here. We were expecting 3.2% for the fourth quarter. This is the sales preliminary, and we got 3.5%. In terms of the headline figure, we were expecting 3.3%, and it came in at 3.2%. Just checking on the indices to see if there's been much of a reaction. This is the Dow Jones Industrials. Just pulling up the 1 minute chart for you there to see if there's been much of a reaction. We've got a long wick that has to be said, and now it's reversing. Stabilization, if you like. Those numbers were pretty much bang in line with expectations. Let's just pull up the dollar basket for you because that might give us a better idea of where that's going. We did see a slight spike there, but yet again, not a huge move if you look at it from a daily basis. However, that minute candle is now moving further lower there. Let's just have a look at the daily chart for you. And as you can see there, not much of a move when you broaden that out slightly. All this will hinge on what happens in the coming session when we're waiting on that big PCE number. That's what's going to move markets this week, or expect it to anyway. Joining me now in New York, Chris Vecchio from Tasty Live, part of IG Group. Chris, are we going to see this PCE form a recalibration of the thinking of the markets in terms of Fed rate timing cut?
I think so, and it's absolutely necessary at this point in time. Yesterday, the odds of a rate cut by June dropped below 60%. We're back to the lowest levels in terms of expectations derived from the market since the middle of November. There's only 3 cuts priced in for this year. We're on the verge of the market pricing in a more hawkish path than what the Federal Reserve recommended in their December summary of economic projections, which technically were already there. They did tell us we're going to get equivalent to 80 basis points worth of cuts in December over the course of 2024, and right now we're only priced for 77. So tomorrow's PCE report is important. The expectations were shifted higher in the wake of the CPI release. Pre-CPI, the consensus forecast was 2.2. In the post-CPI world, now the consensus forecast is for 2.4%. That's an improvement still, right? And that's something that can help the market regain its senses that ultimately we don't need to be so concerned about a double rise in inflation. The Fed's preferred gauge of inflation continues to move in the right direction. And that's why I'm keeping an eye on bonds here at these levels. It could be something like the futures contract through ZN or ZB, or something through the ETF like TLT. You're looking at a world where if the market believes that we're getting a cut in June, we are at the absolute floor for pricing odds right now. PCE tomorrow could be a seminal turning point that helps relieve the tension that's been built in since January 31st. Angeline, I can't help but remember on January 31st, there was a 94% chance of a 25 basis point rate cut in March. That's now at 2%. So a lot has changed in the span of 3 to 4 weeks.
A lot has changed indeed. What a repricing. A lot has changed in the Bitcoin space as well. We've just seen this parabolic move, but that's Bitcoin, which can only be traded in the cash session. But let's just show you Coinbase, because that's all sessions, and you can trade that, well, now really on the IG platform ahead of the cash session. And Bitcoin just hitting another record. What do you make of that? Are we in bubble territory yet or not?
You know, with the crypto space, it's difficult to discern whether or not you're in bubble territory. But a lot of the altcoins, and sometimes people refer to them as other things, less endearing, have actually been performing quite well. There's a lot of capital flowing into the space right now, and it's not lost that a lot of this has to do with the ETFs. Just conceptually speaking, if a stock is added to the S&P 500 or the Dow Jones, what happens? Indexers then have to purchase that stock if they want to continue to track the index. Now that there are the ETFs out there, if they want to maintain whatever's happening in the Bitcoin space, they need to continue to accumulate. Yesterday, the ETFs purchased over 9,000 Bitcoin. You know how many Bitcoin were added to supply by miners? 900. We're going to a halving event in a few weeks. The market right now is in a pretty significant period of demand outstripping supply. Period, end of story. And the fact that the ETFs are going to continue to absorb more of that share as people find an easy way to allocate to crypto vis-a-vis the ETFs, it's going to keep a consistent demand underneath the market for the time being. Obviously, the road will end at some point, but right now, it's very difficult to fade momentum or say that this is the top, given the stats that we're seeing on how supply and demand, particularly on these ETFs, are evolving.
And just really quickly, because I know you've been trading energy this week, particularly LNG. LNG demand globally seen rising in 2024 thanks to demand from China and Europe. We're seeing quite a lot of action there. Where do you think the action is going to come in the latter half of this year? And do you think that perhaps we might see this demand continuing if we see perhaps China perking up? Or really will a lack of demand start to percolate again as we get to the middle of the year?
Well, the International Energy Agency has given forecasts in recent weeks and months showing us that they believe that supply is actually going to outstrip demand this year. And the tracking data that we have through the first 7 weeks of the year suggests that thus far the estimates are on point. Maybe demand is a little bit firmer than anticipated, supply is a little bit softer, but that imbalance remains. That's going to keep a ceiling over energy prices, in my opinion, for the foreseeable future. That said, there are some short-term dynamics at work right now. On the crude oil side, the market is moving off of the least long it's ever been, period, ever been in the speculative market as it pertains to futures. Natural gas prices, we just were at the most extreme position reading that we'd seen since the middle of December. And the last time we were this extreme, we saw a 60-cent bounce in natural gas. And so right now, the structure of the market is it's very thin. Everything bad is priced in. The little bit of good news or a little bit of news that's not so bad can go a very long way to helping prop up prices. Crude oil looks like it's going to break through 78.80. Natural gas looks like it could turn back towards 2. And ultimately, if those are turning higher, what does that mean for inflation expectations? How does that filter into the bond market? How long can stocks ignore that kind of rise? Even if it's not in core inflation, it's still a very important part of headline inflation. And so this is perhaps the, I wouldn't call it a black swan, but one of those little tail risks to watch out for. If energy breaks out from here, that could be a problem for U.S. equities as those rate cut odds then get pushed back even further.
Thanks very much, Chris Vecchio there from Tasty Live. Now, just a reminder, Bitcoin trades above 60,000 for the first time since November 2021. If you want more on that story, Nick Corley has done a story about how the cryptocurrency market cap is just up over 2 trillion, and also talking about perhaps the biggest upcoming event, which is a Bitcoin halving, I believe it's called, in the not too distant future. You can find that on Daily FX or going to @IGCom. Now, just a quick look at Apple as well, because Apple is one of these stories that was really big yesterday, but I just want to check to make sure that hasn't continued moving today. Apple, of course, an all sessions stock on the IG platform. And it is currently looking slightly lower there, down around 1/3 The story surrounding the fact that there have been many reports out there, including Bloomberg News and Reuters as well. Reuters recently saying that Apple has cancelled its work on an EV, and this follows a Bloomberg News report about how staff from that unit will be shifted to its AI unit. Bloomberg News, I believe, the first to report the cancellation of the work on the Apple EV. Apple has been contacted by those news providers, but have declined to comment. And another story that is also developing for us as we speak comes out of the entertainment space. Just pulling up Disney for you, because Walt Disney is all sessions on the IG platform. This just coming through and breaking right now. Reliance and Disney is set to merge their India media assets to create an $8.5 billion powerhouse. So of course, as you know, there's been a huge amount of competition in India in terms of streaming and also entertainment. And this was a deal that has been talked about and in the making for a long time. And it has now finally happened. Reliance and Disney to merge their India media assets to create an $8.5 billion powerhouse. And one other story that is pretty key for us comes out of the tech space as well. We are looking at some of the other movers today, other than the cryptos. Let's just check in on Meta, because Meta and many of the growth stocks have seen quite a meteoric rise since in the NVIDIA effect last week. It has to be said there has been a bit of consolidation now. Those gains, as you can see there, since that NVIDIA effect last week, tapering off now. Let's have a look at Meta as well to see whether it's the same sort of trajectory. And Microsoft, might I add, is another one that we are keeping a close eye on. And yes, we are seeing a base forming there around 39,680. All this, of course, is linked to the NASDAQ, which is called the Tech 100 on the IG platform. And the Tech 100 continues in its upward trajectory. This is the one-day chart, as you can see there. However, I have been watching this rather closely, and I can tell you that the NASDAQ has breached the trend line there, and it looks like it's breaching yet again. If I try and zoom that in for you, as you can see there, it's starting to touch that red line again, and a double breach indicates a tentative fall or change in direction. For more technical analysis surrounding the NASDAQ, Axel Rudolph has been looking at it a bit closer.
Well, Angeline, yesterday we had a look at the S&P 500, and today I'd like to look at the NASDAQ 100, because we're seeing a similar pattern here with regards to negative divergence. And as you can see here on the daily chart, the high we saw last Friday, just above the 18,000 mark, close to the 18,100 level, basically was higher than the one made in mid-February. But if you look at the bottom of the chart, you can see here that the relative strength index didn't make a higher high and actually made a lower high, which means that it is not confirming the latest ascent in the NASDAQ 100 to its record highs, and does indicate that we are now seeing negative divergence. And when that happens, you tend to, at least short-term, get a retracement against the main trend, in this case to the downside, or sometimes even see a trend reversal. So for those reasons, I'd be a bit cautious at the moment, especially ahead of tomorrow's PCE inflation data out of the US, which may perhaps lead to a retracement after the sharp gains we've seen over the last few weeks and months.
Thanks very much. Really interesting, the divergence there, Axel. And a quick look at oil ahead of that PCE number. Just wanting to show you this chart here, because we are seeing oil around 78.58, but we are also aware that, of course, this PCE number could potentially changed the timing of the first US interest rate cut. And we've also had that jump in crude stocks in the US. Just a quick look at some of the comments surrounding oil. We had Thomas Varga, this is the oil broker at PVM, saying that if the PCE number comes in above expectations, well, a temporary top might have been found for oil. And certainly, if I look at the oil chart here, it is above the Ichimoku cloud, which shows that perhaps an upward trend, at least on the daily chart, is still currently in play, although oil prices did pull back on Wednesday. Now, a quick look at the markets before we go, because we're just minutes away from the open. Just having a look at Wall Street there for you. Pulling up the minute chart, if I may, or actually the 15-minute might be a better indication of where we're heading. As you can see there, looking like we are tracking ever so slightly higher as we head towards the open. However, it looks like it's still expected to be a muted open ahead of that key inflation figure on Thursday. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @Angeline Ong and @IGCom on Twitter. This is IGTV.